Let's get one thing straight. You don't have to own a warehouse to have inventory problems. Because in construction, your inventory isn't just nails and wire racks. It's not just the pallet stack behind the shop. It's the material sitting on site. It's the jobs in progress you haven't billed for yet. It's labor you've already paid for, but haven't been paid on. So if you think you don't have inventory, look again. And if you're not tracking how fast that stuff is moving, you're not managing inventory. You're funding a slow motion cash fire. So what is inventory turnover? Inventory turnover is calculated as the cost of goods sold divided by your average inventory. It tells you how often your inventory gets replaced, or said another way, how often you convert inventory into cash through completed work. Let's translate that into construction reality. Cost of goods sold is your job cost, material, labor, subs. Your average inventory, that's what you've got tied up in WIP, unused materials, and I'll use that next week bins. So if your cost of goods sold last year was $900,000 and your average inventory on hand, including WIP, is $150,000, that's $900,000 divided by $150,000, that's 6.0 inventory turnover. That means you're cycling through your inventory 6 times a year. Not bad, but if your average inventory is $300,000, that's $900,000 divided by 300 is 3.0. That's slow. That means cash is sitting idle 4 months out of every 12. So let me give you an analogy in construction here. Imagine you bought all your materials for a job up front, but you didn't install them for 2 months. Then your invoice got sent out 2 weeks later, and the client paid you in another 30 days. By the time the cash showed up, you've been carrying that expense for 3 months. That's poor inventory turnover. And that's exactly what WIP does to your cash flow when left unmanaged. Your money is sitting on the job site, unbilled, unpaid, and aging like milk in a hot trailer. So what is a good inventory turnover? There's no hard rule, but here's a general guide. If you got 6 to 10 times plus a year, that's pretty healthy. You're moving inventory or WIP consistently. If it's 4 to 5, well, that's acceptable, but you've got room to improve. If it's 2 to 3, you're in the caution zone. Your money's sitting too long. If it's less than 2, you're stockpiling or stalling. Your cash is tied up in the wrong place. So let me give you a real contractor example. One client of mine was doing high-end remodels, great craftsmanship, full pipeline, but his books were always tight. Every job was under control, but his bank account said otherwise. We looked at his inventory turnover. Average job had $80,000 tied up in materials and labor. Took 75 to 90 days to bill and collect. He turned over inventory 2.5 times per year. That meant his cash was stuck on job site most of the year, working hard for someone else. How did we fix it? We fixed it by ordering materials closer to the install, batching labor more efficiently, and invoicing earlier and more frequently, doing progress billing. 6 months later, his inventory turnover was 5.8. His cash freed up, and so did his weekends. So how can you improve your inventory turnover? Number 1, treat WIP like inventory. If you paid for labor or materials but haven't billed it, it's inventory and it's aging. Number 2, don't overpurchase. Avoid buying for 3 jobs ahead. You're locking up capital. Number 3, just-in-time delivery where possible. Coordinate with suppliers to deliver when you need it, not weeks before. Number 4, invoice earlier and often. Break jobs into progress payments. Don't let billing lag behind the work. And finally, number 5, job cost in real time. Know what's been installed, what's left, and what's billable today. So here's the final word. Inventory tells you whether your cash is moving or just camping out at your job site. Whether it's in the form of drywall, decking, or half-completed tile work, if you paid for it and haven't been paid back, that's cash you're not using to run your business. That's cash you're loaning to the job for free. That's inventory that's turning too slow. So ask yourself, am I flipping my inventory or just babysitting it? Because when materials sit, when WIP lingers, when invoices delayed, your money's aging like milk and your business is working harder just to stay afloat.